Welcome, everybody. My name is Michael Rivera. I'm the CEO of the Association for Corporate Growth, Los Angeles, and oversee the West Coast offices. Very excited to welcome everyone today. We're joined by Channing Hamlet, Managing Director at Objective Capital, who's going to moderate today's discussion. Something a little bit different for ACG, where we've taken, typically a sector focus. We have an opportunity to do a bit of a deeper dive into particular and very interesting transaction that closed recently for Kindred Bravely, and very fortunate to be joined by the co-founding team and co-CEOs of Kindred Bravely, Deeanne and Garret Akerson, and Dan Gaspar, who's partner at TZP Group based in New York, who was instrumental in getting this deal done. So, Channing, I know we've got a lot to cover in the next hour. We've elected, for those in the audience, to make this a meeting and not a webinar. We're going to roll right into a networking opportunity afterwards. And so that's why we're in a meeting. For right now, we have everybody on mute. I would encourage you to ask questions. Please do so by putting the questions into the chat function. If we have time, Channing can get into some of those questions. If not, perhaps that can be used as discussion points during the networking session. So Channing, you're on mute now, and I would ask you, Sheena, if that's something perhaps you control, or for you and our guests today, take yourself off mute, and let's get started with our conversation.
Great, thanks for having me, and thanks everyone for coming. Again, I have a series of questions for the panelists, but if anyone in the audience has questions they'd like to ask, put them in chat, and I'll try to work them in. So I thought I would start with just quick introductions. So I'm Channing Hamlet. I'm a managing director at Objective. We're investment banking and valuation firm, and we had the opportunity to represent Garret and Deeanne in their sale. I'm excited to kind of let them tell their story and talk about the anatomy of the deal. First thing I'd like to do is just have everyone introduce themselves, and maybe I'll have Dan from TZP go first.
Sure. Hi, everybody. Dan Gaspar. I'm a partner with TZP Group. We are a private equity firm based in New York. We have just about $2 billion under management across several different funds, both majority and minority focused. We specialize in business services and consumer companies, and we differentiate in focusing exclusively on what we call partner of choice transactions, where we look to partner with founders and management teams who are looking to roll a meaningful stake alongside of us. Businesses that are at an inflection point and are looking for the right partner to help them grow to the next level. And as we'll talk to you about shortly, Deeanne and Garret and the Kindred team absolutely fit the mold for what we're looking for in a typical TZP deal.
Great. And so I thought next I'd love to have Garret and Deeanne introduce themselves, and they actually put some slides together to kind of tell the story of the company and introduce themselves that I thought you all would be pretty interested in. It's a great story.
Hi, everyone. Thank you for the invite today. Looking forward to sharing a bit of our story and background on this transaction. I'm Garret Akerson, co-founder of Kindred Bravely. And I'll turn it over to Deeanne.
Hi, good morning, everyone. I'm Deeanne Akerson, also co-founder of Kindred Bravely. And yeah, we're excited to talk about, the experience that we went through. And I hope you'll find our story of value to you and those that you work with. So Garret has a few slides that he's going to pull up so we can tell you a bit of backstory just about who we are as a company. You guys see like some bras behind me in my virtual Zoom background. If you haven't guessed by now, or if you didn't Google us or pull up our website, Kindred Bravely is a breastfeeding and maternity apparel company. And we definitely didn't set out to start this company. It was a total personal need. We have 2 boys. They are 7 and 10 now. And 6 years ago, when we started Kindred Bravely, they were 1 and 3. And so, yeah, it basically started out of my personal need. I was looking for a comfortable pair of nursing pajamas. And I think Garrett's got the slides up now. So we have turned into a company, and we believe that we outcare the competition. We exist to make breastfeeding and pregnant moms' days better, brighter, and we do it through unsurpassed customer care and amazing products, which I personally started designing, and now we have a design team. We love to be the encouraging voice in a mom's head, because it can be a really hard time, and we really care about being generous. That was one of our founding company values, but it didn't always start out like that. So we thought we would share a little bit story about just kind of how we came to be a company that would even be at the place where it was ready to go through a transaction and a saleable event. Because it definitely didn't start like that in my mind. I thought we were just making some nursing pajamas because that's what I needed. And it definitely turned into a lot more.
So at the time in 2015, when we started, I was running a design and development and marketing firm and was looking to do something different. And from the start was not focused on maternity and breastfeeding.
And I was a high school math teacher on an extended maternity leave. And I was, like I said, literally just looking for a pair of comfortable nursing pajamas. And this picture is us up in the LA textile district, looking and trying to shop for that comfortable fabric that I knew had to exist.
So once we had samples done and had the prototype, we sent them off to China. We knew nothing about clothing or the apparel industry, and just learned as we went, and literally had one screen open with Alibaba chatting with manufacturers, and the other screen open on Google, Googling answers to questions they had for us, like what GSM do you want, and how do you want this, part of the pattern done. And we got 3 factories that responded and sent us back prototypes from the samples, and one of those was good enough to go to market. So we started with our first order of 500 units in black and 4 sizes of a pair of breastfeeding and maternity pajamas that Deeanne designed.
So with ourselves newly into this company that we started, we decided, if you want to go ahead and advance the slide. Yeah, we decided it was time to go visit China. And so in this slide, you see us in several different locations in China. We thought it was really important to go visit all of the factories that we had only been chatting with over Alibaba. Ethical manufacturing was always important to us. We wanted to know who we were doing business with. So we spent a month with our 2- and 4-year-old in China back in 2016, and we had to hire our first employee in order to answer the customer care emails. So that was really like the first foray into building it into a business versus just the pajamas.
Yeah, that first year it was Deeanne and I. And then in 2016, we met with all of our the factory owners, the factories that we worked with. By then we had expanded to 3 products, and we're working on 7 more. So we were in the process of having the catalog expand to 7. And, we wanted to make sure we were working with ethical and factories that we would be comfortable selling that product and knew who the workers were as well as the owners. And that served us well to this day, because we still know many of those factory owners, and it has also given us terms that are, I think, more favorable than we would have gotten otherwise. In the next year, we doubled from, actually, I'll turn this over to you, Deeanne. I think you were going to cover this one, right?
Yeah, we just started that growth pattern where we were doubling the product catalog, we were doubling the team. 1 employee turned to 3, turned to 6, turned to 12. Product catalog is over a dozen. I'm processing the returns from the garage. We live in a really small house in South Oceanside, and we soon started to like bust out of the seams. So it's just really like, we're growing. Suddenly we realized like we're onto something here. And not all of those growing, like the growth was good, but it also brought us a number of challenges as well, including like trying to figure out how to keep track of inventory, warehousing, you know, a real system of hiring, all that kind of stuff.
Garret, you're on mute.
Thank you. That carried us to the year 2017, where we won the New York, the Build a Bigger Business competition and got to ring in the New York Stock Exchange as part of the Shopify competition. And again, the business just continued to double or more than double year over year. And in 2018, again, we were number 19 on the Inc. 5000 list of fastest growing privately held companies, and then also made that again in 2019. So in that year, we had a number of changes in 2018, a lot of growing pains, moved into our own warehouse, team continued to expand all across the US. We've been remote from day one. So while the team was remote, we did set up an office in conjunction with our warehouse so that we could meet as a team a couple times a year as well. And I know it's not always a smooth trajectory for most companies. Ours was no different. So while 2018, we continued to see top line double, we actually had 5 months where we had negative net operating profits. And so as a bootstrap company, that was certainly challenging and not without its stress. We implemented NetSuite that year, had marketing costs go up, and a number of other kind of headwinds and growing pains.
I think, you know, looking back on the business and what we grew, probably one of the hardest things was trying to keep that cash that, you know, a bootstrapped company needs at the beginning. And so we couldn't have built the company that we did and got it to a place where we could transact without, you know, several different partners along the way. Like we had early funding from the SBA. We had an Amazon loan when nobody else would give us credit. Amazon would, because we were transacting with them. That really helped us to grow. During that year, Garret was talking about all the growing pains. We were able to leverage like inventory financing with Flexport. And also we were able to get a flexible line of credit with Endeavor Bank at a time when like other banks wouldn't see us. So like keeping that access to cash was really hard during those early growth years. Garret used to joke with me. He was like, don't worry, it's going to get easier. Like as soon as we have like a full year of financials, we'll have access to cash. And then it was like, no, we actually need 3 years. Well, actually we need 3 years with no losses. And like, it just was like never ending. So that, you know, that growth story was, yeah, it was real. And sometimes it was painful, but that's essentially like how we like the story, not unlike other startups like that, you know, there's growing pains. It's hard to get to that place where you actually have something that's worth something and saleable. Because there were times when I literally thought, well, we're actually going to go out of business. We're not actually going to be able to sell the business. No, we're going to go out of business. That's going to be the exit route. But, you know, getting through some of those events kind of really helped us to get ready for a process because, you know, we put in KPIs and we started monitoring like our 13 forward-looking cash flow statement. And it really helped us to get ready, even though I didn't think at the time, like we're getting ready for a transaction. All of those things, looking back, really did.
Okay, so yeah, thanks for taking the time telling the story. I think one of the things that's been really rewarding about our business, and I'm sure Dan sees the same thing, is, you know, working with and supporting entrepreneurs and helping them through their, you know, their journey. And, you know, our firm, we have a sort of saying internally that, you know, overnight success takes 15 years or something like that, where the trials and tribulations of building a company is tough, and it's been fun to support them. So I thought I would just dive in and just ask some questions, and maybe I'll go to Dan first. Tell us what attracted you and your firm to Kindred, and kind of how you guys thought about the investment.
Sure. So, first and foremost, Kindred is a great brand. We had a bunch of folks internally who were familiar with the brand when you first reached out to us about it, Channing, which is always helpful. It has a great brand identity. We love the words and thoughts and emotions that are associated with Kindred Bravely, the brand. It's always a great place to start. We have a ton of direct-to-consumer experience internally, but we know that not every product works, and you really need to have a great product with product differentiation. And one of the things that I love about Kindred is that in a women's apparel category, typically fashion is first. But what I always loved about Kindred is that function is first, comfort is first, and fashion was secondary at best. And we thought that was a great platform from which to grow, because the ways that you differentiate yourself in this market, in an extraordinarily competitive market, is by having a really loyal customer base, and customers are loyal to function and comfort much more so than they are fashion, which by definition is fatty with a D, not fat T. But so that, the fact that these guys had already built a really loyal customer base and had built that brand on their own sweat was something that we were really interested in. Where, as I mentioned in the introduction, we look to partner with management teams, and so we're really underwriting the team even more so than the product most of the time. And the history that Garret and Deeanne just walked through was so compelling to us, because we want to partner with people who know that it's really hard to build a business, who've been through the trials and tribulations, the challenges that they went through in 2018 that they were just describing really did make them better managers. What we look for in management teams is this a team that can scale, and a team that comes to us having never had institutional capital before, that already keeps clean financials and has KPIs and is managing cash flow statements and has processes for dealing with vendors and logistics. That's just a huge place to start from that frankly we don't see that often. And lastly, and if Channing, you weren't going to mention this, another point I will, which is that we know the Objective Capital folks very well. We've already previous in our history done a transaction where we bought a company that they were advising, and so we knew what kind of folks the Objective team were, and we knew when they recommended Garret and Deeanne that we could rely on them to be to be the types of people that we wanted to do business with. And we're probably, I don't know, 7 months in from our first meeting, maybe 8, and it's been 100% true. And it's because we knew that that Channing and the Objective team wouldn't frankly waste our time, given that they knew us pretty well, with a team that wouldn't be the right cultural fit.
Cool, thanks for that. So I'll go back to Garret and Deeanne. I think over the years, our firm works with a lot of entrepreneurs and business owners that are first time sellers, and often the choice of what type of transaction to do, do I sell now, do I raise capital now, do I do this, do I do that, those are really tough choices. And so I think the audience would be interested in some insights into kind of why now was the right time, and kind of what were the considerations that you guys thought about as you figured out what to do as far as a transaction goes.
Yeah, great question, Channing. I would start with, I don't know that there is any quote right time. I think that's a very probably, well, both a business and cyclical question, and then a personal question. And I think it was the right time for us as a family. We considered a minority and a majority recap and an outright strategic sale. And really, when we went to Objective Capital Partners and spoke with Channing, we said, present us options. Really, that's how we came to the team and said, we'd like to consider a minority recap. That's something we could be interested in, as well as a majority or a strategic. And so really the objective team went out there and did come back with a lot of options that we then had to consider. And ultimately we decided to do a majority recap. I think the decisions on the personal family side were that allowed us to diversify some of our risk, since the majority of our assets were held within Kindred Bravely. That was kind of the nest egg we had built up, and still participate in future growth. So I think both of those things really excited us, and the majority recap just made the most sense.
I know one of the things that we did spend some time talking about were family considerations, and the time and effort and risk it would take to keep growing the business on your own, versus kind of bringing in a partner and having outside capital. Maybe talk about how you thought about the risk reward trade-off of bringing in a partner and becoming a minority partner in your own company.
Yeah, Deeanne, you want to chime in on that one?
Yeah, I think it was, if I were to have to say, I'd say maybe I felt a little more comfortable moving forward with this decision, because like you alluded to, Channing, it is a lot of time, a lot of focus, resource, attention, and when it's all on you and maybe a co-founder, it can start to weigh. And after doing this with Garret for 6 years, I really wanted someone to be in it with us, in a place where it didn't all come down, like both success or failure was solely resting with us at the beginning, and that's a lot of pressure. When something goes right, yeah, you reap 100% of the rewards, but we had gotten to the place where we were a big enough business that if something went wrong, I was having a harder and harder time being able to just live in that amount of risk. And so it definitely felt like the right time for me to bring on the right partner. And I have not had any qualms that it was the right time. I don't know if you want to add anything to that, Garret.
Yeah, I think the other part of that was, there was some uncertainty, certainly around risk, but then also partners as we were going into the process. And, I think to Dan's credit and to Channing, the objective team really brought us the right partner. Like, we couldn't be happier with the outcome and working with TZP Group, really from a value standpoint and just, who we are. Dan, we joked early on that Dan and team passed the long haul test. It's somebody we wouldn't mind sitting on a long haul flight with and passing the time.
Even without internet.
Without internet, you definitely need someone to talk to.
So one of the, Dan, anything to add to Garret and Deanne's comments?
No, I certainly can't get into their heads, but I've seen the movie before, and I understood where they were at. They were at an inflection point in their business where they just had great momentum, and they were past the point where they have to worry about, how are we going to generate enough cash to keep this thing afloat, as Deanne was referring to. But growth brings its own challenges, and having to deal with each one of those challenges for the first time alone, as they get bigger and broader, and frankly come with a greater velocity as you get bigger. We've seen so many entrepreneurs struggle when businesses hit that inflection point, and I think part of why there was alignment was we were able to convey to Garret and Deeanne that we've got experience dealing with businesses at exactly this point in their maturation, and that we could be helpful We don't have all the answers, but we know some of them. And to the areas that we don't have the answers to, we also know who to call, which is super helpful.
So I guess I'll ask Dan just a follow or a question along different lines. So a lot of us in the audience have done work with private equity firms over the years, and often we're scratching our heads trying to figure out what's going on behind the scenes at the firm or the investment committee or what have you. It's kind of a mystery. So tell us a little bit about kind of internally your underwriting process and the issues and risks you looked at and sort of what the key factors were and ultimately deciding to make an investment.
Yeah, sure. So look, as everybody in the audience who's familiar with the M&A space knows, doing a process with a private equity firm is a pretty detailed and long enduring process. And Garret and Deeanne can tell you, hopefully they don't feel this way, but I've heard it described as akin to a colonoscopy. We kind of come out knowing everything, of what's hidden in every secret closet. But in every deal, there are usually a couple of basically big diligence items that you really have to get folks internally comfortable with. There's no such thing as a sure thing in any business, in any industry. And so, in this particular case, I think it was really twofold. One was, trying to understand whether or not the company's recent success was a result of what they call a COVID bump, where most direct-to-consumer companies had performed very, very well through the second half of 2020 and early 2021. It's incumbent on the folks in my seat to try to understand which ones really have sustainability beyond the COVID bump. And then the second issue is really identifying whether this business has the ability to continue to scale, which is really a question about market size and position in the market. So, for me, from a COVID perspective, I guess the company grew significantly during COVID, and we were seeing that across many direct-to-consumer businesses. But this company had really been growing significantly year over year. It was not, a 2020 miracle that popped out of nowhere. As I mentioned before, they built up a really loyal and recurring customer base, and they had a product line that, for me, made sense to sell direct-to-consumer. A lot of direct-to-consumer businesses were doing well because retail was closed, but if you think about the product here and the customer that's buying that product, does an 8-month pregnant woman or a new mom really want to go to a store with their crying baby and go try things on in the dressing room and deal with all that, versus if you can service that customer effectively at home, that customer is going to be extremely loyal, because what they're looking for is convenience, and these guys really had that figured out. And moreover, this is a funny thing to say, I think, but this company was really built to withstand a pandemic, because unlike other businesses, they had been virtual since their founding. All the employees were virtual, and so as opposed to other businesses that we were talking to on the time, they weren't like trying to find their ground in how do we operate, how do we do Zoom, how do we work remotely and maintain productivity. That's just the only way that these guys knew how to work. And so it just looked like business as usual when we were coming to get to know these guys. And then from a scalability perspective, we did a market survey. The brand stands on its own. It compares very favorably to many of the other brands that service this sector. As I mentioned, their kind of core products are functional over fashion, and the customer seems to really understand and appreciate that, which we thought was a great basis to grow from. And we just felt that we could take the brand that they've done such a great job of building and build it internationally, build it into some retail selectively, expand the products to grow the business and really monetize the brand that they've built. So those were the two areas that we spent the most time on, but frankly, these guys made it really easy because they had done such a good job of setting the stage.
And I guess Garret and Deeanne, you know, as you guys sort of reflect on the process, you know, there definitely were some, you know, twists and turns and challenges. Talk about a couple of the big concerns that, you know, as a business owner, you know, entrepreneurs that you had as you went through this transaction process.
Yeah, something I was really deeply concerned about is, what is this going to do to our company, to our culture, to our employees? I mean, Garret and I like really care deeply about this team and haven't had a lot of turnover. People are passionate about our brand mission. And I was deeply troubled at the beginning between what I knew we needed to do as a family, as a personal decision, and what that might mean for our company. Like Garret said, once Objective, you know, introduced us to TZP, that fear started to, you know, allay itself slightly, because I felt like there was really clear alignment with values, and I thought there was going to be a really good synergy. But there was still the question of, but what does it really look like? You know, the day after, the month after we transact, and I think that concern was really addressed when we talked to, you know, we did our homework. We interviewed some people that TZP had worked with, and I asked them, you know, how had their companies changed? And they basically all said, well, they didn't. We still run them. You know, TZP is good about asking, how can we be helpful? And they're there to ask the tough questions and make sure that, you know, we're growing in the right ways, because not all growth is good. And so that concern, it started to dissipate as we went through the process, as I got more and more comfortable about what this new working relationship can be. And now I think if you were to talk to our employees, I think they're really happy about how we've positioned ourselves, and, you know, how we're being aggressive about the next stage. And it was the next natural right thing to do. But I'm not always like the first adopter, the one that wants to go out there and, you know, change something that's not yet broken. So that was probably by far the hardest thing about the process for me, is I don't like to go somewhere unless like there's something drawing me there. And it was uncomfortable at first, but I'm really glad with how that played out, because it has that fear that, you know, things are going to change. My employees aren't going to want to work in this new setting where Garret and I aren't 100% owners. It was completely unfounded. Like nothing ever came of it. Nothing could be further from the truth. Other things that were kind of challenging during the process, that due diligence. Dan said it was kind of a lengthy process. I'm going to say that a colonoscopy is a lot faster, even if they're both just as uncomfortable. At least that one's over in a few hours. It was really challenging for a couple of months, you know, 2.5 months, the constant barrage of things that are needed, and they're needed like 8 hours ago. And so like keeping on track of that, man, like Objective Capital, like Austin was amazing at, you know, telling us what we really needed to get in. And but it was hard. It was really hard to manage the process, still running the company and running a family. And anybody that had kids understands that they were all still going to school remotely during this whole process. So managing the kids, managing their education, managing the process, it was a lot. So I don't think that's unusual though for the process. So I don't know if I should mention it, but just to be clear, it was a lot to manage.
Yeah, unfortunately, it's not unusual. But what was unusual was, or at least maybe less so now, but certainly for me at the time, was just negotiating the deal during COVID. That was a big change relative to the many transactions that we've typically done. And you know, we're a relationship-driven firm, and it's harder to develop relationships across the country over Zoom, period. Right. And especially when it comes down to potential items of contention, you know, it's hard to go through those and salvage a relationship when you can't like read the room. And I have to give a ton of credit to Deeanne and Garret and the Objective team because they really understood that limitation, and they made themselves incredibly available and the direct access that they afforded me to them and to their team over the course of those 2.5 months that Deeanne mentioned was frankly more than I've seen in other deals, especially when you have to squeeze so much diligence into potentially only a few days of on-site diligence. I think we really, more than made up for it. So, kudos to the objective team, but also to the potential to do more deals going forward, virtually. And I'll also add that, the Akersons and I are about the same age, and we have similarly aged children. And although we were across the country, we were going through many of the same, or at least similar challenges at home, homeschooling our children, keeping them safe from the virus, balancing work and home when it's all blended together. And I think we all appreciated the human element of our discussions and the perspective that there were bigger things going on than just our transaction. Sometimes it's easy to lose sight of that. And I will say though that, at the end of the day, and despite all the nice things I just said, I still did need to meet them personally. And that was not so easy at a time when travel was very limited. And as much as this may be the new way of doing business, there's just, for me, no replacement for human contact. And so I crashed their family vacation, which I'm very appreciative that they allowed me to do. But we did get to spend some face-to-face time before we closed the transaction, which was really important to me and I think helpful to them.
And Dan, correct me if I'm wrong, you were not ever on site at the offices until after the deal closed.
No, and that probably would have been different with a different company, but because these guys are all virtual anyway, there wasn't an office to go visit. It was more just about spending time with the team. So no, our only in-person meeting was, like I said, crashing their family vacation.
Dinner in the mountains in North Carolina. Yeah.
Yep. Yeah, I think in addition to just the challenges of running a family and a business that Deeanne mentioned, and then Dan, the COVID challenges, there's always challenges that come up during a process. For us, we had our Amazon account deactivated for a period during the process, which was, it's not anything anybody wants or expects. So I think as a seller and founder, how do you explain something like that? And how do you work through it? So I think that for me, that was probably one of the at least most stressful challenges, was trying to close while, having part of our business deactivated and working to get that back up, obviously, during the process. But there's always something. There were a few other things as well during the process that cropped up that I felt were good litmus tests on the partnership and how they would be post-transaction. And I really personally just appreciated how Dan and the rest of the team handled those challenges.
Thank you.
Yeah, I think the audience, and maybe Dan, this is a question for you. I think people would be interested in hearing about, some of the challenges that come up. Having worked on a lot of transactions over the years, it never ceases to amaze me the different weird issues that come up on each deal. And this deal seemed to go smoothly relative to others I've worked on, but certainly there were some kooky issues or unusual issues that come up. Maybe depending on level of detail, talk about some of the issues and how you guys work through them.
Yeah, well, I think to your point, every deal has its cookie issues because every business is going to have a couple of bumps in the road on a monthly basis. And so you're likely to, experience some of those during the time of diligence. And, well, let's take the Amazon issue that Garret mentioned as an example, right? So effectively, for a short period of time, they were delisted, and Amazon is obviously a key distribution channel for the business. So, that's one where I think our reaction showed our experience dealing with direct-to-consumer companies across TZP's portfolio of our direct-to-consumer brands, in that we didn't panic. We've seen this happen before. Amazon can be finicky as a distribution channel, and Garret was 100% on top of it in terms of how to manage it. The three of us had a direct call right away. They were totally upfront when it happened, which I appreciated. We offered our suggestions on how they could best address the issue with Amazon, having done it previously at other companies, and we patiently waited for it to resolve. I think they knew I wasn't going to close over it. That clearly that had to be something that was fixed ahead of time. But they also knew that I wasn't going anywhere. And to their credit, most of the suggestions on how to address the issue that we brought to the table were already being undertaken by Kindred Bravely team, especially led by Garret in the marketing side there, which, if anything, gave me more confidence in the partners that we were choosing. Just in terms of, I think both sides showed what I hope was a good amount of maturity in how we dealt with that issue. Another one that was a little bit more unique in this case is that Deeanne and Garret are really entrepreneurs at heart. And that's what attracted us to Kindred, but it also complicated the deal because they had set up some separate entities to expand into some ancillary markets with different business lines. And I think going into the transaction, they had hoped and proposed to keep those entities separate and apart from the company that we were buying. And one of the companies was really a startup that was losing money. And so it wasn't quite ready for growth equity. It's certainly not what a private equity firm is looking for when we're looking, we're valuing businesses off of cash flow. And, but I knew that we needed to find a way to somehow include it in the business because I was investing in these two people on the screen here. And it was important to me that we were fully aligned. And we struggled a bit, frankly, on how to value it and how to track its success and cost over time. But, we got through it and, we came to a mutually agreeable spot. I think we might have done it in one Zoom call, if not, no more than two. And again, just showed us, I think on both sides, how fair and reasonable we were both approaching the partnership.
It's interesting on that issue. My recollection is talking to Dan, his sort of viewpoint initially was like, hey, we've got this kind of great core maternity wear business. Like, that's what we're investing in. It's big. Like, I don't want to get distracted with all this other stuff. However, the Akersons are, entrepreneurial, and they have this, some other cool ideas they want to pursue. How do we find a place where everybody's happy? And I thought that was kind of an interesting process and discussion to work through.
For sure.
Yeah, I think we did work it through in probably one, maybe two Zoom calls, Dan.
Yeah.
And that was, I was unsure how we were going to get through that. And I would have used the same word. I was struck by how reasonable the TZP group was. It's nice to work with reasonable people. I felt like it was pretty easy to negotiate and come to a meeting of minds. And yeah, that was still challenging, figuring out how do you value, a startup. And to Dan's point, it's not something that growth equity typically invests in a startup. And yeah, we continue to explore growth in those two new startups and what that might look like. So,
Dan, other big issues, challenges?
Certainly no other big issues. And I think the other ones that come to mind probably aren't ready for prime time disclosure. So we'll keep it at that for now.
Okay. So I'm just, there's kind of just over 10 minutes left. So I'm going to kind of move things along. I think one of the questions is, now that I think the transaction closed first week of April, so we're, I don't know what that is, 4 or 5 months into it now. What are the sort of changes and growth strategies and new initiatives, et cetera, that TZP has brought to the table, and kind of how are those discussions all going?
Who do you want to answer that?
Jump ball.
Well, I'll take this first, and then obviously I'm very interested in what Deeanne and Garret have to say about working with us. But our number one rule is don't screw it up. This is a business that has generated consistent growth at high margins, and I don't want to do anything that's going to stop that momentum. But our goal is to, in general, triple the size of the businesses that we invest in, and so trying to figure out how we, as TZP, we have got a full operations team. We're focused on helping our portfolio company partners achieve that growth and improve our operations. So it's really about picking our spots and trying to find the initiatives that are going to move the needle the most. Just off the top of my head, we're working with the Kindred team on expanding their Asian operations, their sourcing operations, where we have some contacts and some relationships that we think we can be helpful. We've set up a Slack channel amongst all of the marketing teams across all of our portfolio companies to share best practices on what's going on, what's working and what's not working, and what has the best marketing ROI on the digital marketing front. And Garret and his team have been really valuable assets and contributors to that Slack channel, but hopefully find it as a good opportunity to get to learn some things as well. Where we've got on the docket to expand internationally. We are looking to pick our spots at retail where we think the brand will sit well and reach our core already loyal customer base. So there's and then product expansion, which I mentioned earlier. It's just such a great brand, and there's lots of ancillary products that we think we can expand into that will be consistent with the Kindred Bravely brand. And so we're trying to help the team be selective and kind of put both our capital and our efforts behind the items that are going to move the needle the most. But Garret and Deeanne, I'll turn it over to you guys in terms of where you think we've been helpful and value added, and how the partnership's been going.
Yeah, I'll start, and then I'll let Deeanne chime in. I think what stands out to me, given that I tend to focus more on the marketing and finance side, has certainly been the portfolio operations team and interacting with the other portfolio companies that Dan mentioned across marketing initiatives. And in particular, the latest initiative we're looking at is like the data analytics and business, BI tools, and just how can we learn collectively from the data that portfolio companies all have access to, and become smarter as a group. So I think that's a big opportunity in particular. And then looking at expansion into retail and how that looks and kind of how we approach that.
And I'll just add that, it seems to be no matter what we kind of decide on a management team should be the next move forward tactic. There's somebody, TZP is very well connected, especially, certain members that are, part of their portfolio operations group. But, no matter what initiative we might be thinking of, there's someone that has deep experience in that. There's someone that plays golf or tennis with someone else who sits on the board of that one and can at least assure us an introduction. There's just a connectedness, whereas before we might have an idea and not know quite how to go forth with it. But there's just a wealth of introductions that are possible, and at least like front doors that are open as we decide like which doorways to go through next.
So I guess I'll shift gears. A lot of the people in the audience are service providers and sort of working with business owners, leading up to and facilitating a transaction. So I think Garret and Deeanne did a lot of things that many of our clients don't do in terms of being prepared. And so if you could sort of walk through some of the things, I guess it's a kind of two-part question. What are the things that you did to prepare and kind of be ready to go through a process? And then in hindsight, what are the things that, you wish you had done differently?
It's a great question. I think, the things that I would probably repeat are getting advice early. Although I didn't know it, some of our advisors were really helping us get ready for this event, even when I thought it was still like a several year horizon away. And it turned out, that actually the horizon was much closer than I thought. So, talk to someone who, for entrepreneurs like us, like, it was our first time going through an event like this, but I think talking to people that this is, what you do all the time, like, being able to provide that helpful advice, because it's not something that entrepreneurs really just know how to do. So, someone that was really helpful in advising us was GHJ. That we had a strategic advisor there, and before we even entertained the idea of what it even means, like there was some advice given, and I don't know where I would have. It would have been like trying to plan, not even like a wedding, because at least people attend weddings, even without a coordinator or something. Like this is something that I didn't know the first thing about it when I was approaching the event. So talk to people that know what it's about, that know what like the whole process means. And so I think that's one thing we did right, is to get good advice early on.
Yeah, I mean, I'll say from our perspective, sorry, Garrett, you want to add
Go
on?
ahead. No, go for it, Dan.
I was going to say, from our perspective, the preparation showed, and it makes all the difference in the world. Deeanne discussed it being a very tough 2.5 months. Had it not been for the pre-work that they've done with outside advisors, it probably would have been a very tough 6.5 months. Just because, like she said, there's just so much, there's a barrage, I think was the word you used, although I don't love that image, but you're probably more right than wrong, of requests that come in. And, the team's ability to process and turn those around in a pretty quick time frame while they're running their business actually tells us a lot about who we're partnering with. And we need the answers, whether they take 2 days to turn or 6 weeks to turn. And the reason that many processes die is because the team just doesn't have the ability to run their business at the same time that they're managing the process. And so I give a ton of credit to Garret and Deeanne for doing the work, having a quality of earnings and those types of diligence that just allowed us to go in and start spending our own time and capital in the diligence process, knowing that we weren't going to have these big surprises, which you tend to have when folks haven't kind of cleaned up their business a bit ahead of time.
Yeah, I would echo that. I would say plan for business owners. The advice I think I tend to give now is plan as if in some way you're not going to do it. So we had a flexible line of credit from Endeavor Bank that was great, so that it wasn't make or break, right? And then do your planning ahead of time and really start early with advisors. So Greenhouse and Jenks, we did a QOV with them ahead of time. We had some strategic advice from them, and then just a wealth of other advisors on the tax front and planning front was really helpful in getting us prepared ahead of time.
Yeah, and I'll give a quick commercial for Objective, but they having done 2 transactions with them, they're really, really good at getting teams prepared for what's to come.
Yeah. Yeah, and actually that was one of the key things when we were interviewing investment banks we were looking at. And the Objective team, one thing that stood out was their focus and ability on the financials side, on building that model and making sure everything is presentable and ready.
And is there, Garret and Deeanne, is there anything that you wish you had done differently? Or anything that in hindsight, you would have changed?
Yeah. Well, there's one attorney bill I could have avoided paying, and Dan knows which one that is, but that was pretty much it.
Yeah.
No, there's really nothing different because if it had been a different time period, there would have been something else that popped up. So I actually can't think of anything I would have done differently.
Same
Okay,
here.
and there's one question that came in from the audience, and it's basically, what's next for Kindred Bravely?
I think we're still early in the game, right? Working with TZP Group and taking private equity. There's still a lot more growth to come. I'd like to think maybe someday we go public, but who knows? Maybe we stay private for indefinitely. Either way, you can't go wrong nowadays.
I think there's a whole lot more comfortable nursing bras in the future of Kindred Bravely because our mission is a comfortable nursing bra in every mother's wardrobe. So there's lots more of that. Dan, what else? What do you see as next for us?
Yeah, so I mentioned a few before, but I think the best way for me to put it is that I'm betting on this team. So I'm not it's great if I can make a contribution here or there, but they're the guys who are gonna and girls who are gonna drive the business. And we did a town hall, which of course with this business was virtual, because as everything is, but we did a town hall after we closed to kind of introduce myself and the TZP team to everybody at the company, including many that we had not met during the process. And somebody asked the question of, where do we want to take the business from here? And, I can't remember exactly, Deanne, how she worded it, but I said, well, I don't know, what ideas do you have? Because, that we're all in this together, and, we're here to be helpful and to provide capital and strategic support. But, this team is made up of a whole host of people with entrepreneurial spirits, and we're just along for the ride.
I think with that, we're sort of at the end of our hour, and I think I'll turn it back over to Michael or Sheena to kick off the networking session. But for Garret, Deanne, and Dan, thank you guys so much for spending the time with us and telling your story.
Thanks for having us.
Yeah, thank you.
Thanks for having us.
Thanks, Channing, and Garret, Deanne, and Dan as well from ACG Los Angeles. Thanks for your time. Really interesting. Channing, excellent job by you and the Objective team putting this together. Really appreciate it. Again, as I said at the beginning, really a unique opportunity to sort of pull the curtain back and learn how this deal came to fruition. I think one of my takeaways is just the importance of narrative, certainly on the marketing side, yes, but being able to convey that value proposition. It seems like Dan and his team really got that and got the potential there. Why does this brand resonate with so many people? And yet, there's so much opportunity for growth. And how does that look? How do they get behind the team and provide that, but don't get in the way, because you do have an incredible entrepreneurial team that can chart a course to success here. And so, we tend to look at things more as, the state of healthcare or the state of fashion, the state of that type of thing, or the state of M&A, and don't often have the opportunity to dig deep into the personalities and the narrative here. So I think that's really a fascinating thing, and hopefully ACG can do more of that. So again, my thanks to you all for being willing to share so much of this with our audience today. I'm going to turn things over to Sheena Nickerson, our membership and events director, who is going to take us from here. We've got 30 minutes of small group networking for those in the audience who can come together and continue this dialogue.